Hello, and welcome to the Josh Brown Podcast. With over 40 years of combined financial planning experience serving high net worth clients, we will discuss our favorite topics, concepts, and stories.
Hello, and welcome to the Josh Brown Podcast. I'm here with Jeremy Jordan, who is a mortgage lender. I've known him for over a decade now, right?
It has been. Yeah.
And he's helped a lot of my clients with mortgages, refinancing, purchasing, downsizing, lots of different things. So
thanks for having me.
Thanks for being here. So I guess we'll start with credit. So what is credit and why is it significant?
Yeah, so certainly it's super important this day and age. I think more than ever, right? I mean, I think credit is really determined to predict basically your ability to repay a loan and to be able to do so in a timely and efficient manner. So especially for the home buying process, your credit score, is the number one factor. When starting the home buying process.
Wow. So I've had clients come in before who say they had no credit because they haven't used their credit in 10 or 20 years.
Yeah.
So how do you measure credit then?
So I think ultimately, take that scenario with an individual that might not have had an active credit score. And it's always surprising to me this day and age, the number of folks that don't have a score for whatever reason. Some of the folks consider themselves old school. They pay for things in cash, and that's great, and I'm not saying that that's a bad financial practice in some ways. But this day and age, more than ever, it impacts your buying ability, not having a credit score. And really not having a credit score, you're treated from the mortgage side as high risk, unfortunately. Despite the fact that you might not have any quote-unquote outstanding debts. So I always encourage folks to start in certain ways. If someone's younger, being able to get added on as an authorized user on a parent's credit card. A lot of local banks and credit unions have like a credit builder or credit saver type program where you can go in and put a secured loan, $500 upfront payment. You just want to make sure that it's going to report to all three of the credit bureaus. But the banks and credit unions have some good options for folks to start the process. If someone has had credit score in the past, they really just need to have active trade lines to get it back functioning again.
Okay.
So it might have been a life support, but you can get that back with activity again. But it is important more than ever to have an active credit score. I encourage folks to have 3 active trade lines.
Three at least.
Now they can have more than 3, and most do, but I think 3 active trade lines is a really good sound place to be at. When you're younger, you might not have 3 active trade lines, and that's okay. But getting started and being established and seasoned, having 3 active trade lines is what I always recommend.
Okay. And what is that score thing they talk about?
So credit scores range anywhere from a 300 to 850.
Okay.
And in my world, more than ever, getting accurate information when it comes to your credit is difficult. Because Credit Karma, for example, is a free platform.
Okay.
And that would be somewhere where I would encourage folks to enroll. It's free. And you can kind of track and monitor your credit on a monthly basis. You can actually also get a credit report annually on freecreditreport.com.
Okay.
And you can get a free credit report on an annual basis, no charge. But the difference between Credit Karma score and what a bank or mortgage company might pull, don't be surprised that it's a slightly different variation of that score.
Okay.
Because there's just a different grading model that those institutions would use in comparison to a bank or mortgage pool would be. I find that if my Credit Karma, for example, is a 780, my mortgage score would be about 20 to 25 points less.
Okay.
And that seems to be the going trend with most folks. So if you're tracking at 800 and somebody pulls a 775, don't be surprised. Whereas if you're at a 625, don't be surprised if you're at a 600. From a banking or mortgage pool. But fortunately, with Atlantic Bay, we pull credit through a company that enables us to do a soft credit check.
Oh, nice.
So the days of a borrower with having a slightly lower credit score and being worried about a credit inquiry that might reduce their score even further are gone.
Oh.
In a sense that we can actually pull a soft pull of their score and give them more of an accurate, up-to-date number for their credit score. So again, anybody that's on the fence about, I don't want my credit score to be pulled because the score might go down, you need to have an institution that has the ability to do that soft credit check.
Okay.
I would encourage folks to have that soft credit check done. And on all my pre-qualifications, I'm always doing a soft credit check first and foremost.
Okay.
It's the safe way to do it, and the client gets up-to-date, accurate information based on that soft credit check.
That's good, because that's been a big thing, is people worried about even
For
checking
sure.
their own credit because they
no
think
doubt.
it will hurt their score.
So like if Verizon or Dominion, if they have to open up a power bill or a cell phone bill, those institutions are doing a soft credit check as well.
Okay.
So that's kind of what we're doing here at Land Bay. But we're doing a full tri-merge soft credit check. So we are going direct to Experian, TransUnion, and Equifax to get accurate information.
Okay. And those are the three, right?
Correct. Experian, Equifax, and TransUnion.
Okay.
Yep.
Nice. Awesome. Okay. And how important is credit when it comes to like your daily life, like jobs, renting, applications,
for
those
sure.
kinds of things?
Yeah. So I deal with clients in the home buying process, and there are some where they might start with a rental agency, or they might end up at a rental agency if they can't find a home. But ultimately, even applying for a rental now, credit is, I think, more important than it's ever been. And having a good credit score, especially if that particular landlord is looking for a certain number or range of their credit score, it could impact whether or not they get accepted to lease that house. Yeah. And we also mentioned from the start that credit is used as a ability to repay and a debt and make payments on time. So one of the best things that a landlord can, or management company can do would be to pull your credit score. To get an up-to-date depiction and accurate information as to what your score is at the present moment. So again, I think that credit is more important than it's ever been. And the rate that you pay, if you went to buy a boat or a vehicle, your credit score is going to impact the type of interest rate that you get. Yeah. Your higher your credit score, the lower rate you're going to be able to qualify for, and vice versa. A low credit score is going to mean a higher interest rate, many times. So. Again, I think credit is super important, and knowing your credit score and working on your credit score, and if an issue does arise, being able to speak with an individual to work with about finding ways to get that score back up, because we do know, and I see it, time to time, being in the business for the last 17 years. Inevitably, folks run into scenarios where their score might be affected. They have a life-changing event,
right.
They miss a payment, unfortunately a job loss or something of that nature, and they have a blip on the radar where their score might go down. The key is working with somebody and getting advice as to what the steps need to be to get that score back up.
Okay.
So there's an individual that owns a local credit repair company as well that I speak with on a regular basis in scenarios where I have a client that needs some insight. And then the nice part about our credit valuation model is that we actually can run what's called a rapid rescore.
Oh, nice.
We can actually give clients a plan that over the next 30 days that they can focus on, and what steps to follow, and how much they would need in liquid assets to pay down or pay off a particular debt, and what the likelihood is that score would see an increase. So, here at Land Bay, we're able to give them information to get them back on that right track.
That's great. That's great. So you're not only just doing the loans, you're counseling people on how to
For sure.
be positioned for a good loan.
Yeah, because again, no credit report is the same,
Yes.
right? I mean, it's no one report is ever going to be the same. So, things change, and being able to have that information and be able to give clients a guide and a step-by-step to follow. Folks are very appreciative of getting that information and getting them on the right track.
Awesome. Okay. Let's see here. What about people that are just getting their first job out of college, and maybe they don't have an income history, for example, to go and get the credit and everything else in line to buy a house?
For sure.
What happens with that?
Yeah, so I think getting added as an authorized user on an account from a parent is always a wise thing to do. And then saving up enough liquidity to go to a local bank or credit union and getting a secured credit account started as well.
There's two right there.
Those are two of the easiest, most efficient ways to establish credit.
Okay.
And if you have no score, you typically have to wait 6 months before you'll start to see a score that will post.
Okay, 6 months.
So if you started in January, for example, you can plan on 6 months down the road before you'll see a credit score, become available.
Okay, awesome.
But it's pretty quick, get all things considered. But again, anyone that might be in college or a parent that has a child in college, starting the steps with getting a credit card in their name or co-signing for them, and having them, start making those payments in a timely manner and teaching them about how credit works, is super important.
Okay.
By the time they're of age, ready to buy their first house, those are always the folks that are in a slightly better position. Because they have slightly higher scores as well, because the length of time, in the credit process to build that credit score up. The folks that start, after they get out of college, their scores are always going to be a little bit lower, especially those first couple years. Whereas if somebody started when they're 20, they're in a really good spot by the time they might be 25 buying their first house.
Very good. Okay. And what kinds of things are common pitfalls that hurt people and mess up their credit, and how do they recover from that?
Yeah, so I think, for example, if somebody has a collection on their credit report.
Collection. Well, tell us what a collection is.
So basically a collection might be, hey, I got a credit card out when I was 20 years old, and I neglected to make payments on it.
Okay.
It got derogatory, and then at some point, it went into what's called collection status. Where they basically had written you off. Well, that goes into a collection status field. And the goal then of that collection agency is to try to recoup, something from that account that was purchased probably for pennies on the dollar. But ironically, with collection debt, folks believe that you can go make that payment and their score will come up. It actually can work adversely against you in the short term. Whereas if you pay off that account that might have not have a reporting history, it still might be out there, but might not be reporting on a monthly basis by that collection agency. Paying that account off in full might re-engage that reporting process.
Wow. And
even despite the fact that they might show a zero balance, it might actually lower their credit score.
Wow.
Only having one credit card account. So, for example, instead of having 3 credit cards with a $500 limit and watching your limits on all 3 of them, as opposed to having one card with a $1,500 limit and maxing that credit card out.
Okay.
Because they really look hard at the proportion of the high credit limit in reference to the balance that's owed on that particular card.
So is it better to have the 3 than the 1?
Yeah, if you can manage the 3 and have, a percentage not be, maxed out like you would with just having one credit card, you're going to be better off having that. Credit utilization, in a perfect world, keeping credit cards to 39% or less.
Okay.
So if it's $1,000 limit, keeping it to $390 or less is the goal. It's oftentimes not met this day and age, but that's kind of the goal, is 39% credit utilization.
Okay.
And there are instances where credit card companies may ask you to increase your credit limit. I don't think that's a bad thing for that to happen like that. If they do that, but again, knowing that if they increase my limit, say from $2,000 to $5,000, I'm not going to then go ahead and max that credit card up by them increasing that limit.
Okay.
So, again, we're fortunate enough to be able to give folks really good sound information about how to guide them, so that if folks have a slightly lower score, what are some strategies to help improve on their credit score over the next 30 to 60 to 90 days.
Okay.
And keeping folks engaged to want to improve on their credit. Because there's nothing worse than trying to buy a home only to be told you can't purchase because you don't meet the minimum credit score requirements, and getting frustrated, and then you run down the rabbit hole and you're following the same things that got you in that position anyway. So if we can keep folks engaged, motivated, and give them strategies to improve on their credit score, there's all kinds of wins that we have where we've been able to guide folks for months on end and get them to the finish line. It's always a rewarding thing to be able to do, because folks are very appreciative of that.
Absolutely. What about, fraud's been pretty prevalent lately, especially with our elderly clients, with all the phone calls they've gotten and emails. What can somebody do if they have something on their credit report that's not theirs?
So you can actually dispute that.
Okay.
And there's a process that the creditor themselves require that you to fulfill. Oftentimes when an account is disputed, it's usually a 30-day timeline on average before you'll hear back regarding that disputed account. But the key is to act quickly and swiftly if you do feel like something has been fraudulently occurring on your credit. Sitting back and not doing anything is probably the worst thing you can do. And then the other thing is the credit bureaus all have opportunities that you can put freezes on your credit scores.
Okay, that sounds
helpful. So you can actually set up and have your accounts frozen. So one of the questions that I ask when I'm qualifying folks for the first time is, hey, do you have any credit freezes on your credit scores? Experian's usually the one that has, if folks have freezes on their accounts, that's usually the main one that's frozen, it seems. But they would know what they need to do to unfreeze their report for, say, 24 hours. Then somebody like a mortgage professional can pull their information, and then they can go back and refreeze that account. So freezing their credit score is another safeguard from being able to have anybody access your information.
Good tips. Okay. And I guess the last thing I'll ask is just a general question with all this credit talk. What are you thinking about when people are trying to decide if they should buy or rent with interest rates having gone up recently?
So, even the folks that have bought within the last couple of years where rates are quote-unquote higher than they've been, right? I think they've all benefited significantly from the fact that there's been significant and growth in terms of market appreciation. A lot of those homeowners have purchased a property and they've seen market appreciation in their values. Nice. They've benefited in a sense that they now own the property that they live in, and they're working towards building equity in that property. The average net worth of a renter and a homeowner is about 38 times the net worth of a renter.
Okay, interesting. Yeah.
So, again, I think all the belief is that homeownership still is the way to go moving forward. There's been a many instance within the last couple years where renters have said, "Man, I should have bought 2 years ago, or I should have bought last year." They got into a rental because it was easy, it was convenient maybe for them at the time. They've seen their rental rates increase significantly. They've moved in, they've gotten comfortable. That $1,500 payment they had has now gone up to $1,900. Right. And they're frustrated. And so again, I think homeownership is still the way to go.
Okay.
The nice part about it is when you get a home, just because the rates might be quote unquote slightly higher now, the saying through COVID was buy the home and date the rate. So, being that you might be in a situation where you might see a 6% interest rate for that first home, it doesn't mean that you're fixed for the next 30 years at paying that higher rate.
You can date another rate later, right? Okay.
If and when rates go down, you'll have the opportunity to look at refinancing that, which in essence will help you reduce your monthly payment moving forward. I've seen more than ever too folks buying their first home and moving in with a college roommate or a family friend, just to help absorb some of that mortgage payment for that first year or two. I did that as well.
That's awesome.
Many years ago, and I still think that's a sound and practical way of doing that.
Yeah.
Because usually it's a win-win for both parties.
Right.
And usually that other party is already maybe paying a higher rental rate elsewhere, and they could come live with you, for example. I'm not saying that that's the perfect situation for everybody looking to buy their first home, that you want to rely on that, but it is an option for the first year or two as you get accustomed to that slightly higher payment and higher rate under your belt. So
Absolutely.
again, just another strategy there.
I like that. One of my first clients was a single guy, and he bought a house in California. It was very expensive, and he rented out every single room.
Yeah.
And so his house was almost paid off by the time he got to me. So it's
That's
pretty awesome. Yeah. Well, thank you, Jeremy.
Yeah, thanks for having me.
For having us. So we appreciate you. Until next time. Thanks.
Thank you for tuning in to today's episode of the Joss Brown Podcast. If you'd like to see more episodes, visit our website at jossbrown.com.